Yeah, good morning and welcome to my presentation this morning, which is going to cover green bonds, their role in mobilizing capital for investments in adaptation as well as in mitigation. I'll speak about our experience supporting green bond market development in Africa with the specific examples in Nigeria and in Kenya, as well as our plans for rolling out the program across the continent. But before I start on the presentation, let me say just a few words about FSD Africa. FSD Africa is a specialist development agency working to reduce poverty by strengthening Africa's financial markets. It was established in 2012 with the support by UK Aid. We work to address 5 main intractable challenges to financial sector development in Africa. The first one being lack of long-term local capital, long-term capital in local currency, dysfunctional credit markets, as well as lack of risk management and mitigation instruments. There are also some challenges around the fragmentation of financial markets across Africa, as well as lack of early stage and risk-bearing capital. So we address those challenges through our work in capital market development, credit markets, risk, integrity and integration, as well as through FSD Africa Investments, which is a subsidiary. So the goal is to drive financing to priority sectors such as agriculture, the green finance, housing, as well as health. We are present in about 30 countries across Africa. We use a number of tools that I'll talk about to drive the change in the financial sector. And of course, we forge partnerships. Through our work, the goal is to have an impact on the real and social economies, and then ultimately address a number of sustainable development goals. FSD Africa is in the process of developing a green finance strategy to coordinate and intensify our green finance work beyond the green bonds across all the areas of activity that I mentioned. So the goal is to support the financing of the green sector, greening the financial sector, greening FSD Africa investment itself, FSD Africa itself, as well as the partners. In terms of the tools that we use, we have many of the tools that we use to support market building activities. Those include the convening, market insights and advocacy, technical assistance, investment capital through FSD Africa investments, returnable grants, as well as grants. In the capital markets work, we are currently implementing over 40 projects in 28 countries across Africa. Our programming covers a number of areas, including new products, such as the green bonds that we are talking about today. We're also doing some work around the Islamic finance, gender bonds, real estate investment trust, as well as the private equity. We have a number of capacity building initiatives across 10 countries and regions in Africa. We're also supporting market infrastructure development, so creating new exchanges, particularly bond exchanges. We're also supporting regulators through our flagship program called the African Regulatory Support Program that is benefiting 10 regulators across 10 regions and countries, both in the Francophone as well as the Anglophone Africa. We have a number of data and knowledge management tools that we have also established. So let me now deep dive into the discussion for this morning, which is on green bonds. But allow me to give a quote from Mozambique, just to set the context. It says, "A river that cannot be controlled is bound to burst its banks." Climate change is like a river, and if we cannot control it, it's bound to burst the banks, and the outcome of that will be quite disastrous for all of us. So why is climate finance so important globally? Limiting global warming to 1.5 degrees requires rapid and far-reaching transitions and mobilization of both private and public capital. And the OECD estimates that we need about $6.9 trillion annually up to 2030 in order to meet climate objectives. The GCF has also estimated that there is a number of financing gaps for adaptation and mitigation, On the adaptation front, we need about $220 billion annually, but we're only able to finance $22 billion. For mitigation, the need is about $1.2 trillion per annum. But so far, what is being financed is only $249 billion annually. The capital markets can play a big role in attracting private capital for climate finance. And there are a number of instruments that can be used through the capital markets, both debt instruments, such as green bonds or sustainability bonds, or equity instruments, such as green funds or ethical funds, green REITs, etc. And we can also use a number of outcome-based financing mechanisms, such as the payment for environmental services and development impact bonds. So the menu of instruments that we can use in the capital markets for climate finance, mitigation, or adaptation is quite a lot. Africa is going to be at the epicenter of climate change impacts, with fragile and vulnerable communities especially at risk. As investors apportion funds into Africa, green bonds, which provide a very transparent governance and outcome tracking, are a very innovative proposition for sustainable finance across the continent. We established the Green Bond Program in Kenya and Nigeria with the aim of catalyzing the market, partnering with governments and private institutions in order to scale up long-term financing available for climate finance. We are in the process of scaling up the green bond market development in the Southern Africa Development Corporation, as well as the West Africa Economic and Monetary Union. But what are green bonds? Green bonds are essentially regulated instruments. They are very similar to conventional bonds. They are subject to the same capital markets and financial regulations as other listed income securities. However, the main difference is that the proceeds from green bonds are exclusively applied to eligible environmental and or social projects. And to ensure the integrity and the governance of the green bonds, a number of principles and standards have been developed. The leading ones being the Global Green Bond Principles, which cover 4 areas. One is the use of proceeds. The second one is the selection and evaluation of the project. The third is around management of proceeds. And the fourth one, which is actually very important, is around reporting. Green bonds, especially the labeled green bonds, are also subject to an external review. This is a second-party opinion or a verification or some form of certification to give assurances to investors that the bonds meet the criteria that has been set for eligible investments. If you look at 2019, the issuances of green bonds, the bulk of the proceeds went into renewable energy, about 32%, green buildings, 30%, transportation, as well as water. So you can see the process of green bonds actually going to very impactful areas. So why are green bonds attractive to investors and issuers? There are a number of reasons why they are being favored by issuers and investors. For the issuers, they improve investor diversification because green bonds are able to attract new types of investors into existing instruments. We have seen repeatedly that most of the green bonds that have been issued across the globe have been oversubscribed, and that might have cost benefits for the issuers by reducing the yields that the issuers have to pay. And for the investors, green bonds balance the financial returns with the environmental benefits. And also, similar to issuers, they have very strong reputational benefits, basically showing leadership on sustainability for both the issuers as well as the investors who are investing in these instruments. The green bond market has been growing quite strongly since its launch in 2013. In 2019, we had about 270 billion worth of green bonds issued globally. It's still a small part of the global bond market, which is about $100 trillion. But as you can see, the growth is quite phenomenal. And by far, green bonds have been able to mobilize the largest amount of capital for investments in adaptation and mitigation compared to other sources of capital, such as public green finance. So since the last maybe 10 years or so, green bonds have mobilized nearly $1 trillion of investments that have gone into adaptation and mitigation. In Africa, The green bond market is still nascent. In 2019, the outstanding issuances were $2.7 billion, with about 6 countries having issued green bonds either at the sovereign or at the corporate level. This year, Egypt has been added to the list, and the total outstanding amount is about $3.5 billion. So we expect this number to increase quite significantly over the next few years, perhaps doubling. So let me talk very briefly about our experience supporting the green bond market development in Nigeria and in Kenya. And as I mentioned before, the goal was basically to build an ecosystem for green bonds in the 2 countries. So we worked on issuance regulations as well as listing rules, working with the 2 regulators, SADC Nigeria, as well as the Capital Markets Authority in Kenya. We also worked with 2 exchanges, FMDQ Securities Exchange, the Nairobi Securities Exchange, and prepared green bond listing guidelines. We also worked with authorities and stakeholders in Kenya to get physical incentives or tax incentives for green bonds. So green bonds in Kenya are now exempted from paying withholding tax, making it much more attractive for investors as well as issuers. We also ran a number of capacity building initiatives targeted both at the public sector as well as the private sector. We've supported the framework development as well as verification for a number of issuers in both countries. We've also worked with issuers, hand-holding them, taking them through the process of reporting so that we give assurance to investors that the use of proceeds is in line with the expectations. Then we have also supported a number of demonstration transactions in both Kenya and Nigeria, and I'll talk more about that later on. And also through FSD Africa Investments, which has invested in the African Local Currency Bond Fund. We've also had an opportunity to invest in a number of first-time issuers of green bonds in Nigeria and elsewhere. So a few words about the issuances that we've seen on green bonds in Kenya and Nigeria. So in Nigeria, we have worked with the sovereign, the Nigerian government, to issue its maiden green bond. The proceeds went towards solar and sustainable agriculture forestry projects. We also supported Access Bank, which is one of the largest banks in Nigeria, to issue a green bond, which raised about $41 million equivalent. And the proceeds went to finance investments in Eco Atlantic City to protect it from rising sea levels, as well as solar energy plants. We also supported the North-South Power issue in Nigeria, which raised about $22 million for investment in renewable energy. And in Kenya, we supported Econ, which is a real estate development company that issued about $40 million worth of green bonds for construction of environmentally friendly housing for students in Nairobi. This particular bond was listed in the Nairobi Securities Exchange as well as the London Stock Exchange. So what is next for the green bond program development at FSD Africa? As you can see from the map on that slide, we have very ambitious plans to roll out the green bond market development across the continent. So we are currently working in Kenya and Nigeria, as discussed. We are doing some work in Ghana, looking at the potential pipeline of green bonds in that country. We are supporting a transaction in Malawi, which will be the first one in that country. We're also working with the Moroccan authorities on green bond markets transactions. We are also looking at a pipeline development in the West Africa Economic and Monetary Union. And we also have a number of regional initiatives to support climate finance and green bonds market development. Soon we'll be launching a training program on climate finance, collaborating with the Cambridge University, as well as the Eastern and Southern Africa Management Institute, ESAMI, as well as the IIED. And we're also working with the IOSCO, the Africa Middle East Committee of the IOSCO on Sustainable Finance. And I mentioned about the SADC Green Bond Program, which is going to be a regional program supporting 16 countries in the Southern Africa Development Corporation. And again, it will be focusing on market building, looking at the regulatory enabling environment, supporting a pipeline of transaction, as well as building capacity among market participants. So that is the experience we've had so far. Participants, allow me to end with another proverb. This time it's coming from Ethiopia, from the Amharic people, the Amhara region, and it says, it is better to do things when you can prevent them than to cry when you're already suffering and nothing can be done anymore. This is the time for us to do something about climate change. And we as participants in the capital markets can do quite a lot, as I've explained, in mobilizing long-term capital for investment in adaptation and mitigation, which will make the world a much better place to live. Thank you very much. So thank you. I can see a number of questions that have come through. And the first one is around the impact of COVID-19 crisis on our projects. Has there been a very big impact or not? I think what we have learned from the COVID-19 is that there's a strong relationship between health and the environment. And I think there's much greater awareness created within the countries that we are working in. And I think that has given us much more impetus to support the market deepening. Obviously, there have been challenges for potential issuers in the market, both at the sovereign level as well as the corporate level, because the economic consequences of COVID-19 means that the physical position of a number of sovereigns is going to be impacted, while as the corporate profitability will also be impacted negatively in a number of places. But purely in terms of awareness of the need to do something about the climate change has increased quite significantly. And we have also gotten the sense that a lot of the investors in the capital markets are becoming much more aware, and we are getting more humane capitalism basically building up, because it is useless to make lots and lots of money if the investments are going to go into a world that is going to be unlivable. So there's a lot of awareness about connecting a lot of things around the profits and the planet and the impacts on the communities and people. Yeah, so I'm seeing a question about, given your experience in this field, how do you convince governments to invest in green finance? So there are two or three reasons, three ways in which you can be able to convince governments to invest in this. One, obviously, is that when you're looking at climate change, it presents risks as well as opportunities. So if you look at the risks, there are risks that come out as a result of transition. So transition to low carbon environments will cause significant translocations, either in the financial sector or the economies. And if governments do nothing about it, the economies are going to become very uncompetitive. The other risk, of course, is the physical risk, which most people will understand. And then, of course, there's a final risk, which is more about insurance. People are suing because the governments have not done something, or the businesses have not been able to do something to disclose risks or to basically mitigate those risks for investors. And those are very significant risks that can potentially cause huge impacts. So that's on one side. And then on the other hand, the opportunities that come out as a result of that. So those same risks can cause opportunities in terms of transitioning to renewable energy, and that can create a lot of opportunities for investment as well. And of course, creating more stable, communities. We estimate that investments in green investments are going to probably cause faster economic growth and create many more jobs, compared to investments in the more traditional asset classes. So there are significant opportunities there as well, to be honest. So another question I'm seeing is that, in my opinion, do you think that after the current crisis, green bonds could be a good option for attracting private funding for environmental protection projects? If yes, why? I think the answer is a resounding yes. I believe that the current crisis has put a spotlight on green bonds and their potential to finance. There are a number of benefits why this will be the case. One of them, of course, is the transparency that I talked about. Green bonds are much more transparent compared to the conventional bonds. And because of that, many investors perceive them to be a little bit more safer in a sense, even though the credit risk does not necessarily change. And it allows the investors to have a much more meaningful dialogue with the issuers in terms of what those companies are doing to address their environmental footprints and all that. And then, of course, we have seen a lot of demand for issuances that have come through. And I believe a lot of issuers are also going to be attracted to try and get a share of that pool of capital that is available. Good. So did you see differences between project implementation in Kenya and Nigeria? And what are the lessons that we can learn from this about green financing, both in Africa and in the developing world in general? So there were a few differences, I must say, but not major, because in both markets, green bonds is a very nascent market. So we were starting from scratch. Before our program started, there was no single issuance of green bonds in the market. So we needed to do a lot of education to the public sector as well as to the private sector. We didn't have issuance requirements for green bonds. We did not have listing requirements for green bonds. So we had to start from scratch to create an enabling environment. And then, of course, we had to convince investors why it was important for them to consider investments in green bonds, as well as issuers on the benefits of issuing green bonds in the market. So as far as those dimensions are concerned, they were very, very similar in both markets. And if you look at the state of development of the capital markets, they are relatively similar. I think the main difference I can say I have seen is in terms of the size of the pipeline, the potential pipeline. So in Nigeria, we have had 4 issues already coming through. We also have a rich pipeline coming through. In Kenya, we have had 1 issue coming through, but we probably have a slightly bigger pipeline of our potential issues in Kenya than we might have in Nigeria at this point in time. And the size of issues that are coming out in Kenya, especially on the sovereign side, potentially, is much larger than what we have seen so far in Nigeria. But I can say the experience has been relatively, similar in many ways. So there's another question here is, how large a role does the lack of regulatory framework on green climate financing in many countries does it pose a problem? And how can we overcome this? So it's not a very big challenge. So I gave an example of a transaction we're supporting in Malawi. Malawi doesn't have a regulatory framework at the moment for green bonds, but it's possible to issue a green bond in Malawi. Why? Because all the regulations that we've been supporting are aimed at basically benchmarking against the global leading practices. So pointing towards the green bond principles or pointing towards the climate bonds standard. So because of the existence of those global standards, it's fairly easy to issue green bonds in different markets. However, there are benefits of having local regulations, because then you can have something that is a bit more nuanced to the local environment. And one other important factor is that by having local regulations, you actually point a spotlight. The signaling impact is actually quite huge, because when your regulator comes out and says, we have now listing requirements for green bonds, it's a signal to the market that the market is ready, or the regulator is ready to support the issuances in that particular region. So it has also a big capacity building dimension to it as well. Okay, thank you. So there's a question about the technical definition in green in buildings and housing investments. So this refers to a number of dimensions. There are a number of standards that have been developed to look at that. So including the LEED certification, or the IFC Edge toolkit and all that, or tool. And they basically look at a number of dimensions, including the materials that are used for the construction, the use of energy in those buildings, the use of water, how waste is recycled in the buildings and all that. So there are a number of dimensions that are used to evaluate the greenness of a building. Yeah, so I don't know whether I cannot see any additional questions. If there's any that I've not answered, I'll be very happy to respond to that. Yeah, thank you. So there's one last question, which is, how do I hope this edition of the Paris Peace Forum will support the work in this project? I see very many possibilities. One, of course, is around building partnerships with the participants who are here, both in the public sector as well as in the public sector. And also see this forum playing a very important role in terms of advocacy on why climate change is important to be addressed, how capital markets and the green bonds in particular can mobilize investments for adaptation and mitigation, and potentially working together with their partners for demonstration transactions in different regions and all that, and the capacity building initiatives across the regions where we are working. So I see a lot of potential for collaboration between ourselves and the other participants who are attending this forum.